Welcome everyone, Pat Mitchell here, and in today's video we're going to be talking and answering the question what you should do with your retirement investments, your 401ks, all of that with a pending or implying market crash. So if a market crash is coming, what are you supposed to do with all of your investments? So I got asked a question just yesterday, and I've decided, because I get asked this question a lot, so let's go over into the screen. Let me share my screen. So the video that I just released the other day, this could be huge. The biggest day trading play in history. Professional day trader shares massive stock market trade plan. That sounds like clickbait. It is not. This is a two-part speculation play. Do I believe that the market is going to crash right now? No, absolutely not. I actually believe that the market is going to keep going up for a while until a catalyst comes in. And it's a very specific catalyst. And I formulate the whole trade plan and I tell you where I'm going to buy the whole nine. Go watch this video, because I do believe at some point here in the very near future, because of a lot of factors that I go over in this video, that there is going to be potentially a absolutely monstrous crash coming. It will rebound and reset quickly. The recovery will be very sharp. It'll come up very quickly, but that remains to be seen. Regardless, go watch the video. And on this, I got asked a question. It's the question I get asked all the time. Scott asked, definitely going to take advantage of this in my trading account. Any ideas on what I should do with my 401k? So I wrote Scott a pretty lengthy answer. And then I'm like, you know what? I'm going to make a video, because I get asked this question all the time. So I'm going to send him this video first, and then I'm going to release this. Obviously, it's released. You guys are watching it right now. So let's go over the ideas. First and foremost, the first question you need to ask yourself, I can't help you with this, is how much time do you have left? That's important. So what do I mean by that? Well, what I mean is, how many years do you have until retirement? How old are you? Right? That's number one. Because if you're 20 years old and you're worried about a market crashes are very short term. And the reason for that is a question I have for you guys. What are markets designed to do? Are they designed to go down and stay down? Or are they designed to go up? Well, it's the latter. They are designed to go up. Yes, we will have corrections and pullbacks and crashes, but if you think for a second, each one of these crashes on the chart here, and we're going to go over them, if you think that they weren't by design, especially the one that is coming is heavily designed, you're crazy, because that's what it is. And the reason why they do this, you have to remember, billionaires are very different than us. Hedge funds are very different than us. They are the smart money. They are the wolves. When you have the money and the means to basically do and formulate any plan and execute any plan you want, you can conceive, that's a very powerful position. And that's what's going on here most of the time. Almost each and every one of these, like the tech bubble, this one here is the housing market crash. Then we have COVID. We also have some corrections and then a technical bear market in here. That was part of US-China trade negotiations going south. The very first time here on this pullback in here is where I made my biggest trade. I saw that coming and executed on that day. Beautiful. I've done videos about it. And then our last correction and pullback was in this area. We just about hit a 20%. So a market crash is, or a bear market is defined as a 20% retracement from highs. So we are very high. And I do believe there is a potential, I'm not saying it's going to, a potential on the one that is potentially coming to go 63% down, which puts us way down. That puts us at the bottom of COVID, and then it'll come back up. But that's at a monstrous 63% retracement. But let's go over right now how far back markets pull. So it also, the second part is, what is your average on your investments? Like, when did you start investing? Let's say you're 50 years old, 55 years old. You've been investing into the markets or into your 401k for decades, it's been a while, right? So we can go back quite a ways and find out what price points you would be in, right? So let's say when you first started putting into your 401ks, you're somewhere in June of 2010. So can this market crash touch your position? Now, obviously, they've been averaging in along the ways, yes, but still, on your behalf, is it going to come and crash all the way to here? The answer is most likely not. I'll never say never, but most likely not. The odds dictate it's not coming all the way down to $104 a share on the S&P 500. Not going to happen. Okay, so like I said, at worst is this level here. That's the lows of COVID. And it also puts us into some technical support at about 215. It's about a 63% retracement from highs right now. Okay, so number one, how many years do you have left? Number two, when did you start investing? Because if you were 20 years old in the time of this housing market crash, and you were investing and you're starting to work and you wanted to pull your 401k, well, that was silly, wasn't it? Why? Because markets are designed to do one thing, go up. So now let's take a look at some historical data, because this is the part of the answer to the question that you're going to have to ask. How much time do you have left? So let's take a look from lows until we came into these highs, back into these highs where it recovered. And it recovered in about 5 years. It took 4 or 5 years to recover. And then we didn't have much time, did we, on this one? From the time we recovered to the time it slipped again is about 6 months. It was not long, man. Not long. 161 days. That's not a long time, is it? And then once we recovered, it crashed again. But technically, it recovered, okay? So from the time it crashed, from highs to lows, is quite a while. It was about 2 years. So it is a 2-year pullback. It took 2 years for it to bottom and then start making its way back up, okay? And that tells me here, from lows to where we recovered is about 4 or 5 years to recovery. Now let's go from the lows of the housing market crash, okay, until it recovered. We're trying to get an average here. That's why we do this. So from the time we crashed, right, we want to get that price point. It's right in here until we recovered. And that is 4 years. So again, do you start seeing some sort of a pattern? It takes about 4 years, 5 years. It's in that neighborhood for you to recoup and recover to where you were prior to the crash. Do you have 4 or 5 years left? That should be the answer. Okay. And if the answer is yes, don't be fucking panicking. Okay. Don't be selling. But let's take a look at this for really what it is on this first one. So from the crash here until we recover the second time, because remember, we technically recovered, but it was only for 6 months and then we crashed again. So let's see to where we actually recovered fully and then the market went straight up. You're looking at about 10 years. That's a long time, isn't it? But most of you watching this, let's say you're in your 40s or early 50s. Will you be able to recover in a back-to-back market crash? Okay, spanning 10 years. Yes, you will. So do you see at the very worst, the worst case scenario, according to historical data here, that's what it takes. It can take up to 10 years. But on average, these crashes, they don't last very long. They last anywhere between 4 and 5 years. And lately, ever since this one here in 08, the other crashes now, any retracement, any type of bear market, any type of correction, any type of crash, we recover very quickly. Let's take a look at that bullshit virus that happened. So from lows until recovery, we're looking at 120 days, less than 6 months. You understand what I'm saying? So people panicking in these situations and selling your 401ks or any of your investments because the market's going to crash is fucking silly. It is absolutely silly. Okay. So that's kind of where we start with this. And these are the questions that you're going to have to answer. The one thing that I'm going to add to this, and it's going to be very difficult to know, you would have to talk to, and because it's a 401k, you have no control over it. You have no idea what your average is, okay? How they averaged in, how they were buying. Because if you take a look at this chart, ever since with the recovery after the housing market crash, it has went straight up with very minimal pullbacks. Even COVID, it was a 35% retracement. Don't get me wrong, but these numbers are very different now because of the nature of this market, where we have 35% retracements from highs, which is a crash and a bear market. It's not a lot, okay? These ones before, these are, if you actually take a look, even though these are big pullbacks and it looks scary as hell, they almost look more natural. This one doesn't. We ended up coming down, breaking lows. But this one here, from the way we cruised up, went straight up, and then we crashed. You see how it's about a 50% retracement? And it is. It actually ended up being about a 50% retracement. So if you take a look at what would be a natural way for this market to pull back, it's going to put us in that 63% zone. And that's why I've put that target on that video, on that trade, that speculation trade that I'm talking about. You'll have to watch it. I'm not going to explain it in this video. To really know and understand where your average is, and this is why I'm such an advocate of doing things yourself. If you're young, obviously, if you've been investing into your 401k all these years, do your thing. But I'm talking more to the younger crowd that may be getting into the workforce. You're better served investing it yourself and having control and buying proper dips and buying, like, if you're going to work a retirement plan, that's how you do it. So for me, the reason why I will be buying this next crash very heavily, well, we've all seen this. It's just historical data on the charts. And there's lots of things that I haven't done in my trading career that I really wish I would have taken advantage of. I've made money on these dips, don't get me wrong, but not to the extent that I should have. And I know we shouldn't be thinking about shoulda, coulda, would-haves in the world of trading as a professional day trader, but to have the control to be able to do this and understand historical data and know and understand how markets are designed is a big, big check mark next to your name and a feather in your hat. Because when you understand these markets and you understand this shit on a whole other level, you have confidence in your trades. You will not get emotional in these trades. And speaking about being emotional in these trades, what I'm telling people to do, it's not going to be easy. When these markets crash, we all think the market's going to fucking zero. And that's another thing on how they have designed the market. And these crashes and these retracement from highs happen. They're designed like that, the way that they come down. And I'm going to point something out for you to you guys right here, because this is really interesting. Do you see this right in there? You see this little dip? So you see how we have support. There's technical support right there. That's from the lows of the tech bubble crash, the lows of it. Then we recover, we come back down. Do you see how it comes down right into that? It breaks that and scoops right back up. There's so much volume in this, it's ridiculous. But do you see this last bit of volume here? How much volume got washed? And there's a red candle in there, right there. It's some of the highest volume in there. And that's because when they broke these lows, they stopped out right there. They stopped out the rest of the retail traders. and the retail investors that have been investing. They stopped them out. They sold literal lows. They got out of their investment positions just to have this thing recover. They do it all the time, guys. On this next crash, where I'm saying it can potentially come to here, it won't surprise me. It actually comes lower and a lot lower to really freak people out. That volume down here is going to be monstrous, because this here is where everybody is going to sell. The only ones that are selling up here are going to be swing traders and short-term investors in the market that got in sometime at COVID. Maybe they bought the high of that breakout. So right in this area, there is going to be monstrous volume selling off. They will stop all of that volume out. You know how we've all heard that, they can see your stop orders. Well, they're not looking at your stop order. They don't give a fuck about Joe Blow's stop order. But when there are millions of Joe Blows right at a specific price point or technical support, then it becomes relevant. That's where they will take out those positions, and that's what's going to happen. So right here, massive volume will come in on that breakage, which will drive it real hard and fast, and then it'll slow down, it'll crash out, come a little bit lower, and this is where it's going to start to bottom, but they can easily crash that out. Now, I'm giving lines here that I'm not saying that it's coming right to there, but it won't surprise me that we come back down into this area or possibly these lows very easily. So I know all of that is super messy, but I think you guys get the point. So on this here, that's basically kind of wraps this up. Make sure to like, share, and subscribe. If you have any questions, make sure to comment. And if you want to learn how to become a professional day trader and you are actually wanting to take this as a serious career path, come to tricktrades.com. We do not work with people that are gamblers and looking to make a quick buck. We are looking to work with serious traders that want a serious career in the world of day trading. And I hope this answers the questions that you guys may have when it comes to, should I sell my 401k? Should I panic? What should I do? No, don't sell it. The only people that should be selling are maybe the ones that are right on the verge of retirement. And if you're on the verge of retirement right now, we're talking like 6 months to a year, you're looking to retire, get out. Now, I can't give advice. This is just what I would do in that situation. Right at these highs right here, that's about it. We could come a little bit higher. We could. But honestly, how much higher are we going to go before we pull back? And if you're looking to retire in about a year, this is probably the time to do it. That's just my opinion. Now, I'm not saying that it's going to continue down. We could crash out. Maybe I'm right, maybe I'm wrong. Ultimately, we will recover, though, over time. And that's the whole idea of this. Markets always recover in time. So on that note, folks, I hope you enjoyed this. Make sure to like, share, subscribe, do all that fun stuff. Catch you on the next one, guys. Adios.